Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Kickstart video for December 12th, 2024. In this Kickstart video, take a look at three of the major currency pairs, the Euro versus USD. Where are the risks? What are the biases? So on and so forth. So let's get started. All right, with the price action we've seen this week, looking at the hourly chart makes the most sense in the Euro versus US dollar. We are in day 4 of the trading week, and we started the week above these cluster of moving averages right here, and toward the Tuesday we fell back below these moving averages, or at least one of them for sure, actually two of them for sure, the 100-hour moving average and the 200-hour moving average. That's the blue and green lines in this chart. The lower line represents the 100-bar moving average on the 4-hour chart, and as you can see, when the price fell below the 200-hour moving average, we held it not once but twice yesterday, and trading here today we held resistance against it a third time on this move to the upside here. So there is a pattern going on here where the sellers are leaning against a 200-hour moving average, forcing the price to the downside, and that keeps the bias more to the downside for this pair. Now, we have seen a series of higher lows through here, where the price made a low here, a higher low here, a higher low here, and in trading here today, so far we've had a higher low. So getting below these higher lows would be a step in the more bearish direction, but this area right through here is my next key target on the downside. That if we were to move below this level, that would further increase the bearish bias. You can see how there's a number of different swing lows right here that if it broken, we would open the door for further downside momentum in the pair with the 1.0424 level as the next target. This swing area comes between 1.0448 and 1.0461. So that would be our target on the downside and trading here today. All things would disappear and move tilt the bias more to the upside if the price can move back above these moving averages, of course. If it does, then we look toward the 38.2% retracement of this move to the downside, get above that level, and opens the door for this swing area up through here. Yes, we moved above it on the employment day, but then reestablished resistance against this level right here before moving lower. And then the following day, on Monday, as a matter of fact, the high price came right against that level and found willing sellers to help to push the price to the downside. So sellers are in control below the moving averages. We'll see if they can keep that going and move toward the lower swing area. Let's take a look at the dollar versus yen. And again, the hourly chart makes sense from a technical perspective to look at. And what we've seen over the last 2 trading days is a break above the 100-bar moving average on the 4-hour chart, also above the 200-day moving average. That's the green line in this chart. We moved up to test the 200-bar moving average on the 4-hour chart and the 50% retracement level. Both those levels coming between 1.5269 and 1.52785. And you can see how the price has either held near the 50% or right near the 200-bar moving average. Not once, not twice, not 3 times, but 4 different times, including one today at today's high. So we're staying between this level right here and this level down here. And if the price can either break above this level, we look toward this swing area here. Or if we break below, we'll look toward the 100-hour moving average and then look toward this swing area right through here, which has a number of different swing lows and swing highs that form this level through here before moving to the upside. Yes, we moved a little bit below it in trading yesterday, but that was quickly reversed to the upside. So I'll watch those levels on the downside. Finally, let's take a look at the sterling versus US dollar. Again, the hourly chart makes more sense for here, but what we notice on this chart, whereas in the other charts we did tend to find resistance near key moving averages levels or retracement levels, this price has been somewhat naughty in that it keeps on breaking above the 200-bar moving average on the 4-hour chart for a brief amount of time, move above and move below, move above, stay a little bit above it there for a little, and then it moves below, moves above it, moves below, moves above it, moves below, moves above it, moves below. So there is an attempt to get above the 50% retracement, attempt to get above the 200-bar moving average in the 4-hour chart. And that still remains the decision tree for traders. If the price is going to go higher, we need to get and stay above that level. Then we'll look toward the 200-day moving average and the 61.8% retracement in this swing area here on the top side as the next key target. Alternatively, if we do break below the 200-bar moving average on the 4-hour chart and this swing area right through here, you can see that how this area has become a strong floor through the last 5 or 6 trading days through here. If we break below that level at 1.27125, that would open the door for further selling. First break is through the 200-hour moving average, and we're trying to do that right now. So that's a technical look at 3 of the major currency pairs. Take a look at the hourly chart, because the ups and downs make that the most logical one to look at right now. I hope you found this video helpful. My name is Greg Michalowski. Good fortune through trading. Bye-bye now.